Thank you, Mr. Chairman. Thank you, Chair Yellen. It's an honor to speak with you, and thanks for taking a big chunk of time to talk with us today. What we've raised on the screen here is a trade-weighted U.S. dollar index, and for an extended period of time, your time as chairwoman of the Fed, you've emphasized a desire to raise rates. To what extent has currency appreciation impacted your ability to do that?
Well, I think the appreciation of the dollar partly reflects market expectations that we would be raising rates faster than many other advanced countries. Our economy has been growing more strongly, and we've had stronger economic performance. The expectation that rates would diverge with the U.S. moving to higher rates than other countries has induced capital inflows, which have served to push up the dollar, as your chart shows. And that is one of the ways in which monetary policy normally works.
Right.
Of course, so it is tended to diminish net exports. It's had a negative effect on our exports. It's diminished spending in the economy, and it's part of how it's tighter monetary policy or perceptions that there will be works to slow aggregate demand.
Right, and so in that sense, it's holding down the same pressures that you would hope to do. So the strong dollar is doing some of the same things you would hope to do with the rate appreciation.
That's right. It's
but the
part
effect,
of how
the
it
effect
works.
for the saver then, with the currency appreciating, is that rates are still low. So time value of money, the rates are still held low, and it has an impact on hardworking families trying to save for retirement. Well, it might have a similar effect from monetary policy, the effect on Americans in the domestic economy. Would you agree with that?
Yeah, I mean, how the dollar moves is a factor. As I say, it's part of a response to monetary policy, but it's not mechanical, and that does affect the interest rate path we put in place that's appropriate.
Thank you for that. Now, one of the things that you had talked about is you're commenting on policy, so I won't ask you a specific policy question, but in theory, if there were an adjustment that had an effect of raising the cost of imports by, say, 20%, and there was something that had the effect of lowering the cost of exports, would the currency market fully clear? Do you believe that that would happen? And if so, would that still result in a net change in our balance of trade?
So I know that there have been discussions and academic work in connection with the border tax that suggests that an appreciation of the dollar could fully offset, as you've said, a tax change that raised the cost of imports and provided a comparable export subsidy. And in principle, that could provide a full offset. The problem is there's great uncertainty about how, in reality, markets would really respond to these changes. And a strong set of assumptions is needed to believe that markets would fully offset those changes. It's very difficult to know just what would happen. There is more than trade that affects a country's exchange rates. Market participants' expectations matter, and there's a great deal of wealth. There would be shifts in wealth. The value of U.S. assets held in foreign currencies would be greatly diminished by that.
Thanks. I think you anticipate my next question, which is, $2+ trillion of U.S. assets held offshore. One of the desires would be to see some of that put to work in the U.S. economy. So to what extent over the past several years of high appreciation of the U.S. dollar does that affect the value of the repatriation? And do you feel that currency would have an impact in the present context of relatively high rates in anything we would do policy-wise with fiscal policy to drive those balance payments?
So I'm not sure I've got it. That was a complicated question, and I'm not sure.
Sorry, I put it, and you've been answering them for a long time. So The net effect of the currency appreciation on repatriation, is there a fiscal policy that we would do that you feel that would be offset by the strong dollar? What would happen in that context?
I'm not sure I've got a simple answer for you to that. It's a complicated question.
My time is expired.
Time, as the gentleman has expired. The chair now recognizes